Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome, everybody, to this week's episode of the Fiscal Physical Podcast. My name is Aaron. I am joined by the founder of Alchemy Wealth Management, Ryan Nelson. We are knee-deep in 2025 by the time you guys are listening to this episode here. I would say it's probably the greatest year yet. I don't know about you, Ryan. What are your thoughts?
So far, so good.
Awesome, man. Well, how are you doing today?
I am doing pretty darn well. Yeah, no complaints on my end.
Good. Well, we are going to dive into this week's topic. You know, Ryan, one thing I do like about this podcast here, and I liked about your book in general, too, Your Fiscal Physical, 7 Keys to Becoming Financially Fit. I really enjoyed the way that you covered different topics that weren't just, I guess, what everybody thinks about with financial stuff.
Sure.
Like I think when I think about financial, I'm like, oh, okay, like I don't think really of insurance. It doesn't specifically come to my mind like that too. But I think it's important to be aware of these things that feed into your financial knowledge and your life in general to better prepare you for those things. So
absolutely.
I think there were some excellent things covered in the book, and one of the areas that that we're going to talk about today is property and casualty insurance. And you might be listening to this and be like, "Well, what the heck does that have to do with anything like you guys have talked about previously?" So I'll go ahead and pause here and let you break this topic down, Ryan.
Yeah, so it's oftentimes referred to as P&C insurance, which stands for, like you said, property and casualty insurance, and it's really insuring property and the liability associated with casualty. And so there's two main things that, when we talk about P&C insurance, we're really typically talking about automobiles and homes. So those would be the two main types of property, P&C or property and casualty insurance. And to your point, this is like a little different, right? It's not the stock market. It's not, investments. But at the same time, if you were to, on your drive home, get in a car accident, knock on wood, and end up needing, destroying some piece of property, and you did not have insurance, and so you're out, who knows? Let's use an extreme example: $500,000.
Sure.
I'm assuming that would affect your retirement planning.
Absolutely.
Right?
Yes.
So you'd want some sort of protection that when you're on the road, I mean, heck, some of these cars, some of these trucks are $100,000 trucks, right? You could go buy a $100,000 Tesla. If you caused a pileup of 3 of these trucks or something, there's potentially $300,000, right? Yep. Oh, yeah. So these numbers can add up pretty quick. And if you're not properly insured, and an event does take place, that's certainly going to affect your retirement planning and the likelihood of you reaching your retirement goals. So these are things that you do, of course, want to make sure you have your sort of ducks in a row, and you've done sort of your due diligence to make sure that if one of these unfortunate events does happen, that you're sort of prepared and your retirement plan can keep moving along uninterrupted. So that's sort of the purpose of why this stuff is in there, if that makes sense.
Yeah, absolutely. No, that really paints a picture of like, hey, like, these, if you're not properly insured or and a situation comes up like this, then it really could affect you in other ways, specifically with your retirement or just your financial outlook on life in general. Overall.
For sure.
Cool.
So let's talk about both of them real quick. So we can talk about auto insurance real quick and then home insurance. So auto insurance, it's required by most states to have it, and there's certain minimums that you have to have. But the auto insurance is really protecting you against 3 main things. That's the damage to your vehicle, damage to another person's property, and then injuries. So that example I said, if you're on the freeway, you cause a 3-car pileup, you're going to obviously probably have damage to your vehicle in that instance. You may have damaged $300,000 trucks in that instance, and heaven forbid, there might be some people who got injured and need medical bills paid for or something like that. And if you're the one that's responsible or liable, you could have some financial responsibility in all 3 of those cases. And so again, if you have a good car policy, you could protect yourself against in basically the insurance company would step up and help you repair your car, get it back to new, help the others those claims would fall onto your insurance if you cause it, help them get their cars all fixed up, and help those others or maybe yourself pay for those medical bills that were required. So pretty straightforward and simple. Yeah. But that is what sort of insurance or auto insurance is in a nutshell.
Yeah, that makes a lot of sense. I feel like hopefully everybody who's listening to this has auto insurance. And I just want a quick story that I have here. So I have a pretty clean driving record for the most part, but about in 2019, I got into a little fender bender. And what I thought was a little fender bender, like, everybody was able to drive off just fine. No cops were called, whatever. And so I just was like, okay, cool. I got a call from my insurance company. Like the person had filed a claim. I was like, yep, that makes sense. We got to go. It had some minor damage to the car. And so then a couple months goes by, I don't really hear anything from anything, and then I get a bill in the mail, and it says like, hey, like you owe like $100,000 for this, like an accident that happened, and I was like, what the heck? So I like called my insurance company, and they were like, oh, well, it looks like the person hired a personal injury lawyer, and they had like a back surgery because of this accident, and I was just like, what? Like, what? Like, I was just blown away by this. I was like, what do I do? Like,
that's
and
crazy.
I got this like bill that was like, hey, you could be responsible. And like with my auto policy, I had like a $50,000 like per person like injury on it.
Okay.
And I was like, well, that's not going to cover that. Like, what the heck? And then it just happened that like then when this was happening, COVID hit and everything like stopped, like as far as like really, I never heard anything for like a year and a half. Okay. I just thought it like went away. And then I get another, like a year and a half later, I get another bill for the same amount that it was actually a little bit more. And I was just like, what the heck? I have full coverage on my insurance. Like, what are we doing here? Like,
right.
And so I'm freaking out. Like I'm going to have to cover this like cost that whatever. And I immediately thought I was like, wow, my financial future is in the toilet now like with this. And long story short, it ended up like being fine that my insurance company didn't want to pay the full amount is what it was. They only wanted to pay like $30,000. So they had to provide all this documentation and like go through all these hoops and whatever. And then once they sent this over, like they covered the full 50 and then it was done. Like there was nothing else. So it ended up working out just fine. It was more of a scare tactic than anything, but it really got me thinking about this. And I was like, oh my gosh, if something comes up like that, the medical industry is very expensive.
Oh yeah, absolutely.
And so injuries specifically, making sure that like I up my policy right after that specifically, because I was like, whoa, if this just happened here, what could happen if it was a 3-car pileup and 6 people were injured or whatever? So, everybody ended up, I think, being fine in the end, but it was wild, like just in general, to think about how quickly that stuff could add up.
Absolutely. And yeah, I think most policies, that last piece, so I said it could provide protection to damage to your vehicle, damage to other people's vehicles, and then I said injuries to others. Yeah. I think most policies will cover both the legal fees, the legal bills, and medical bills associated with that. So yeah, in your example, it sounds like there were some legal bills.
Yeah, there were some legal. Once again, I had no idea what was going on, and it just so happened. I doubt this person's listening to the podcast, but the person I got in the accident with ended up being my buddy's like escrow officer. Later when he bought his house, and I was just like, he like sent me like the documents, and I saw the person, and I was like, oh my gosh. I was like, well, make sure their back's okay, kind of thing. So it was a small world, just kind of how that stuff works. But anyway, auto insurance, and then let's talk about the personal property.
Homeowners. So homeowners, similarly, right? It's going to be very similar to auto, except it's going to be for your home, right? So this is going to include damage to your home. So you're obviously not driving your home around, but so that could result from a fire, vandalism, flooding, other weather events, right? But so it's going to cover damage to your home, damage to your personal belongings, so stuff inside of your home, as well as injuries to others. So if somebody, the classic example I always hear is if somebody's walking up to your they're on your front stoop and they slip on ice, you could potentially be liable, and this would help protect you there. So home insurance, very similar to auto insurance, is protecting you damage to your home, damage to your belongings inside that home, and then injuries to other, similar to the auto insurance. So yeah, very, very similar. Again, both of them, I think, like you said, your same example, that person could have, instead of gotten a fender bender, they could have slipped on in your stoop, or, unfortunately we've seen, more and more of these houses being destroyed by, hurricanes and fires, and, home insurance is going to protect you from both of those. And you may need certain like add-ons to these policies that you'd want to talk to your insurance provider about. You might need specific a specific rider or add-on for, say, floods or something like that.
Right.
So certainly talk to an insurance professional for all these, but hopefully it gives you a little bit of an idea exactly what it is. And then sort of in addition, I kind of think about it similar to home insurance, but there's also going to be renter's insurance or condo insurance. And then that would be, it could protect sort of your belongings. Like if you're a renter, you want to get home insurance because it's not your home,
right?
But you could get renter insurance to still protect your belongings inside the home. And then, like we said, for auto insurance, that's a requirement for most states. For homeowners insurance, it is not legally mandated, so you do not need to have homeowners insurance. With that being said, there may be other circumstances that do require it. So, for example, the most probably applicable to most people is going to be if you have a mortgage.
Right.
So your mortgage company, let's say your mortgage company lends you $300,000. They're fine lending you $300,000 because if you stop making the payments, they're going to take your house. Yep. And so they'll sell your house and they'll be made whole on their $300,000. But if your house burns down and you don't have any insurance, how's the insurance now you're not going to keep paying your mortgage probably. And now you're out. The insurance company's out $300,000. Like what happens there, right? So the insurance company could mandate that you have insurance on that house, or the mortgage company could mandate that you have
before they lend you that money.
Yep, exactly. So that's going to be the most applicable. But there could be some other circumstances where you're sort of required. It wouldn't be by law, but it would be some other obligation that requires you to have homeowners insurance. And again, most common is going to be your mortgage lender.
Yeah, and I can't remember. I think you were the one that told me this. Like, so when I bought my first house, like you sent me over. I was like, hey man, like, what do you pay for like homeowners insurance? I think I asked you this, and you sent me over the policy because there's so many different things that you can like add on or whatever to it. And I was like, oh man, like, and I looked and like I think that you had quite a bit because you have roommates like people, and you had quite a bit for like the casualty piece of it or the personal whatever for it. And I think you also had earthquake insurance on yours too. And it was interesting to kind of just go through the different things. And I remember you giving this example of like, oh, if my roommate slips on my steps and falls down and like breaks his leg or whatever, like technically I could be, liable for that. Or if I have a party at my house and like people, fall off my balcony, done. Like making sure that you're covered for these different things too. So it's very interesting depending on what you're trying to do with your, if you have roommates or you're having people over, like whatever it is, like just being aware of these certain things, I think is important.
Yeah, absolutely. And it is, I think, feel like also oftentimes this asymmetrical risk where it's like, you should always look at the numbers. So like, let's say earthquake insurance, right? And guilty as charged. I don't even know if I still have earthquake insurance or what.
Why would you?
Right? But the point is, like, as you're going through these evaluation processes, you should at least get a quote for it, figure out what it costs, and then do a small assessment of your risk. So, somebody living in the Midwest, I don't think they have earthquakes in the Midwest. You probably don't need earthquake insurance, right?
Sure.
We live very near a fault zone. We do get occasional earthquakes here, and it'd be interesting to see what the cost is. If it's going to cost you $40 a year to have earthquake insurance, well, even if you pay that for 30 years, you're out $1,200, or you're out in that example, $1,200. It's like, yeah, that sucks. That could have been $1,200 you didn't pay. But the flip side is, if anything did happen, and you're out, say, $600,000,
right?
I could recover from losing $1,200 over a 30-year window. Recovering from losing a $600,000 house, again, would be devastating towards my financial plan. So as you start evaluating it, it's like, okay, paying $1,200 over 30 years, my financial plan, I can still retire as planned. It's not going to affect my financial plan. The asymmetry of this is if I choose to save it and my house gets destroyed because of an earthquake, I probably cannot follow my current retirement plan. Right. It would completely change it. And so as you start thinking about these things, I think it's a good sort of tool about with all insurances, what are the asymmetries between this risk? And that, with that being said, it doesn't mean you should buy any and all insurance, but you should do that proper evaluation.
Yep. Absolutely. That's a great way to put it, is make sure that you're just aware of it. And, I think that's one of the main things with this podcast and these topics that we cover is like, hey, maybe it's not right for you, but at least be aware of it. Like, absolutely. And I think that's one of the things that I gained from these sessions with you, Ryan, is just being like, wow, you know what? Like, I still don't fully understand a lot of these topics. And I think that me not working in the industry, I think that's understandable.
Yeah,
but at least I have a general idea of what they are and that they're out there. Like, and knowing why they're important and how they could potentially affect me down the road. So if they do come up, like, I'm like, oh, actually, I do have a little bit of knowledge on that. And then I can also know where my resources are to go find more information on it as needed. So hopefully people can take that away from this episode. Different episodes that we kind of do and kind of just like, hey, you're not going to learn everything from this, but understand a little bit about the concept, I think goes a long ways overall.
Yeah, 100%.
So awesome. Well, appreciate it, Ryan. As always, we'll go ahead and take a pause here and we'll be back on the other side of this. Everybody hang tight.
And now, to put the personal in personal finance.
Welcome back to this side of the Fiscal Physical podcast. I am here with Ryan Nelson. Ryan, I would consider you in general a problem solver. Would I be off base on that? I feel like
maybe the best.
Yeah, the best. Maybe the top two in this room, I'll tell you that.
Yeah.
But I do think about you as like your engineering background, just kind of your inquisitive nature, like problem solving. I think about when you came over to my house one time and the classic thing that you see of people having sprinklers on and they're like watering their, street.
Sure.
It's just going too far. And like, I was like, oh man, I'm not really sure how to like fix these. And you're like, well, let's figure it out.
Yeah.
And you know what we did? We figured it out and it was awesome. You're like, oh yeah, it's just a couple turns here or whatever. And like,
sprinklers never.
Yeah, they're broken.
They've never
by the way.
Again, yeah.
But that's just kind of your nature of like, hey, let's figure this out here. So I'm curious to see what your general approach is to solving problems as they kind of come up in life or whatever it is, if you have kind of an approach that you use.
Yeah, I mean, I certainly want to say I have like a structured process that I just identify. Oh, here's a problem. Let me go through this process. Right? But with that being said, this is the process I use. No, but I am like
a very structured approach.
Yeah. But like you said, I am an engineer by education. I think that has shaped me in many, many ways, and certainly the way I like do problem solve, I think. And so I'd say I do follow like what's called in air quotes the scientific method, or which is almost identical to the engineering design process. And it's really just this iterative process. And so like this is what the scientific method is defining a question, gathering information and resources. So that'd be number one, define a question. Step two, gather information and resources. Step three, form an explanatory hypothesis. Step four, test hypothesis. Step five, analyze the data. Six, interpret basically the data. Seven, publish results. Eight, retest, right? And that's a very, again, structured. I want to say that's what I do. But that process, like those steps sound like just eerily similar to like the way I plan with my financial advisory clients, right? Is we're going to figure out where we're at now. So where we're at, what are we trying to achieve? I feel like that's defining the question is where are we at? What are we trying to achieve? That'd be relative to like retirement, but also almost any question that pops up, I'm trying to achieve not getting water in the street from my sprinklers. Right. Where are we at now? Water in the street with the sprinklers. Okay. Sure. Now we know where we're at, right? And then we want to sort of gather some information. So just be like, okay, what's all the information that's relative? Looking at this sprinkler, I see like some screws on the top with a couple little diagrams. Can't really figure out what those diagrams are, but it looks like there's arrows and stuff. Looks like these screws might be designed to be twisted. Okay, cool. And then we start to sort of figure out, okay, what could we do here? Or sort of come up with hypothesis. Like, let's start spinning some of this screw. Like, I think this symbol might mean this. Let me turn it like clockwise. Let me tighten it.
Right.
And then you do it and you test it. So let's go turn the sprinklers on. Oh man, it's going more in the street.
Yeah, exactly.
So now we've just analyzed the results. We've said, wow, no, we did that wrong. Now let's turn it counterclockwise, right? Let's do it. Let's get it back to where it was. Turn counterclockwise. Oh, okay. It's moving in the right direction, right? Now it's this iterative process. Still not all the way out of the street though. Okay, perfect. All right, it sounds like our hypothesis is probably pretty good here. Let's do it again. Turn off the sprinklers. Turn it a little more counterclockwise. Turn the sprinkler back on. Perfect. Looks good. Yep, I love it. And that's like in essence the practice, right? And so that would be the scientific method. Just like in practice with this example, you just like threw out there.
Sure.
But so it really is figuring out where you're at, where you want to be, what's the potential process of getting there, trying it, and the important part is iterating, right? You're almost never going to get it right like the first time. So as you're planning for retirement, like we talked in a couple episodes ago, it's about the process, the iterative process. It's really about the end result is almost meaningless. It's how do we get there? Same like the sprinklers, you're never just going to unlikely if you have a real problem that you don't currently know the solution to. It's going to take you a couple attempts to be like, okay, is this right? No. Okay, I overdid it. I didn't do it enough. Let's iterate to that. So, I'd really say that's kind of my process.
Sure.
What about you?
Yeah, no, I just call you normally. I always say.
Did you iterate to that process though?
Yeah. No.
Did you? No.
No. Why would I? But it's one of those things that I think that method is like it really is. There's a lot of steps that people take in that. And like I said, using one method and going through the different, like, okay, step 1, step 2, like that's not really feasible to do specific. But it is, the main thing is like defining the problem, figuring out what the problem is, and like then honestly, like for myself, like I think about, okay, cool, like how can I solve this? Like what's the potential solution? What's the potential solution?
Hypothesize.
Hypothesize. Let me try those solutions.
Right.
What did I learn from them? And so it is just pretty much that same exact method that I use overall. And then it's like, okay, cool, adapting down the road too. And I was really glad that you kind of brought this up, because during the episode with the retirement needs analysis, like you mentioned, like, cool, this is kind of how it is. Like, where are you at right now? You clearly have a problem, if you will, to solve for retirement, for example. And making sure that you really hit on that last piece of iterate, of adapt, of really make sure these different things. And so it's fun to see, like, honestly, I don't like when problems come up, because I don't think anybody really does. Sure. But sometimes it is fun to solve them. And like you get it done and you're like, oh man, like, winterizing my sprinklers or whatever, like a couple years ago, they blew up on me because I didn't do it right. Yeah. And you know what? Like, I learned from that, and I'm like, and this year they might blow up again. Like, then you just get the sprinklers removed.
Yeah, exactly. Turn it to
iterate. Exactly. So anyway, it's always cool. I fancy you a pretty good problem solver in general, and I think that it's fun to see, like, when the brain gets working like that too.
I love like these logic problems, and not riddles so much. I'm not so much a riddle guy, but these like logic problems. Sure. I refer to them as. And my like anytime we're on like a long drive or something, like I always try to get my fiance to like read these things to me, and then I can just like think about them. But nobody ever wants to. Nobody ever finds this fun to me. I feel like nobody ever.
And that's the ex-fiance. But I think it is funny. I remember one of the first times that I met you. We were hanging out at our apartment. Like we've been living together for a little bit, and you asked me this like question about like light bulbs in a different room or whatever. And it's a hell of a question. And I bring it up to I brought it up to my work one time, and it like just stumped everybody, and then everyone thought I was just a weirdo for this. And I remember, like, when you told me about it originally, I think I was 22, 23. I was like, wow, okay, this all right, we're diving into this. But then you like walked me through like how to kind of solve it or whatever, and I was like, awesome. Like, that's so cool.
We'll have to save that one for a future episode.
Yeah, we will. Think about this, guys.
Stay tuned.
Stay tuned for the light bulb. I don't know what it's called, but that's what I refer to it as overall. But anyway, appreciate it, Ryan. As always, thanks for the conversation. Appreciate the knowledge you share here, and appreciate all the listeners checking us out here. Hope you guys learned something. And Ryan, any final thoughts?
As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.